Welcome back. I'm Pratap here. Today is the 21st June 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. So yesterday we identified 6 high liquidity zones from daily time frame and 75 minutes time frame. So before we look into these stocks, an announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel, click on this community tab. You will get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on this link. I'm clicking on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we'll provide in the Telegram channel. Now let's get into the analysis discussion. This is the first one, APOLLOTYRE. Here you have a ERC candle, you have a base candle and a drop candle. Actually, it is a failed ERC candle. Failed ERC candle can be used in leg in. Leg out only in special scenarios you can use. You are yet to learn those concepts that we will see in the advanced lessons in the near future. And here, how you need to treat this candle. This can be treated as a drop candle or a rally candle because this is a failed ERC candle. That's why NeoStock software uses some special algorithm to handle this candle. It uses several checks. Because it is a ERC candle, based on the body, we will identify whether it is a rally or drop. But this is a failed ERC candle. It doesn't have sufficient body compared to the normal drop candle. So that's why our software considers this as a rally candle depending on the wick and the body and their comparison. The algorithm works in a complicated way. So that's why it's a rally based drop. In rally based drop, you have to use up to the higher wick of the leg-in candle. That's why this is the zone. If you consider this as a drop based drop, you will be drawing the zone something like this. Sorry. So that way this zone will be violated. But currently the zone is not violated, because we are using up to the higher wick of this leg-in candle. So still it is a valid zone, because some of you might be wondering how this zone is valid. The trick is within this failed ERC candle. The higher wick of failed ERC candle is used. Okay, anyway, these are some special scenarios. Rarely you see such kind of scenarios. So that's why you might be having some confusion sometimes. So be careful. Software is taking care of each and every minute level scenarios. Some of the concepts which you are not aware, software is still taking care of that. That's why it's an advanced software. Okay, this daily zone we need to fine tune with 75 minutes time frame. So here you have a ERC candle. You have a drop candle, a base candle and a drop candle. You have a 75-minute zone. Apart from that, you have one more 75-minute zone, drop, base, drop. So these are the two 75-minute zones are identified, and we need to fine tune both the zones with 15 minutes time frame. Here we have a 15-minute zone. So you have a ERC candle as a leg in again, two base candles and a drop candle. It's not a great leg out, but okay. we can consider, because we are more interested in the fine-tuned 5-minute zone. And we have one more 75-minute zone. I will explain how we fine-tune this. So here again you have this is the again a failed ERC candle as a leg-in, 3 base candles and again a drop candle. So this is the way we have drawn again another 15-minute zone. Now both these zones again we need to fine tune with 5 minutes time frame. And here you have a rally candle, 1, 2, 3, 4, 5, 6 base candles and again a drop candle. This is the way we have drawn a 5-minute zone. And here also you have a rally candle, 1, 2, 3, 4, 5, 6 drop candle. That way we can draw. But if I hide these candles, see how price structure is changing. See, this is changed as a rally base drop. All these big candles are making these candles small. The moment you hide them, you are seeing proper structure. This is a rally candle, base candle, drop candle. So that way I have drawn this zone. But from this zone, multiple times, we are seeing a huge rejections from these zones. That means there is a strong order flow. Maybe it is a high liquidity zone, I am thinking. The reason is multiple times this zone is getting tested. And again here also. And one more point you observe. Look into this 75 minutes high liquidity zone. This 75 minutes high liquidity zone is picked up the orders from this fine-tuned 5-minute zone, and then this zone is created. We already learned lesson 22. A lower time frame zone is the origin for creating the higher time frame zone. See, this fine-tuned 5-minute zone is the reason behind the creation of this entire daily high liquidity zone. That means here there is a strong order flow in this area. So this is what I've been considering as a strong order flow will be there. See, here recently also prices came very close to this, near to this zone, and again came down. So we have a strong order flow in this fine-tuned area. Apart from this, we have again another here also. As I told you, we have a rally, base, 6 base candles and a drop. This zone is also tested already. Multiple times. There is a huge rejections. See, here price came to this zone and again huge rejection. Again prices entered into this zone, again a huge rejection. Probably there is a strong order flow. Maybe this also might be a high liquidity zone. Today again you see prices came near to this zone and again it came down. You might ask, can we take a trade here? No, you cannot take a trade here. The reason is, even if you keep the entry buffer, slightly the zone is trade is missed. See the high of the candle is 507. But what is the entry here? It is 508.65 paisa. 508.65 paisa. How much buffer you can add? 0.01% buffer you can add. So hardly you can add 50 paisa you can add. 50.8 paisa. So you can say 50 paisa you can add. So 508.65 minus 50, how much? 508.15 paisa. So, but the price went up to 507. So still 1 rupee 15 paisa difference is there. So that's why you can't take a trade. So we miss the trade here. So entry buffer is not enough to take this trade, but came very close to this. So there is a strong order flow even here. Institutions probably keep on adding new order flow here or before the zone. That's why prices, maybe next time again prices are entering, definitely you can plan a trade if this stock is recommended by our software in the coming days. But today we missed the trade. See, after that it gave a very good move. It went close to this zone and gave a good move, but we couldn't take the trade. Okay, this is about, so can we take again another any newly created, here 15-minute zone is there. Rally, base, drop today. Have you seen? This is the 75 minutes fine-tuned zone. Here a dynamic zone is created today. But this trade happened during the last hour of the market. This is the dynamic zone. This is the 15-minute zone and a fine tune with 5-minute zone, and where this 15-minute zone is created today in the 75 minutes fine tuned area. So it's a valid zone. So here you have a leg in, base, drop. You can draw a zone like this. You can take the entry once prices entered inside, you would have taken. So when prices entered into this zone at 14:10 during the last one and a half hour, okay, this is good enough. Only you have to keep a target for your 5 minutes level only. Because 15 minutes target is not. So what is the nearest 15-minute zone available here? Here you have a 15-minute zone, demand zone. But prices didn't reach. It couldn't reach up to here. This is the level prices reached up to here. Maybe here some 1 minute zone might be handling the prices. Let us find that. Here you have a 1 minute zone which is preventing the prices to enter into not to enter into this below 5 minute zone. See here there was a rejection just before. Now again came from here and again took. Again at the end of the market hours it closed here. Only this could be your target. Maybe here you might not have exited. You might be thinking it will wait, but if anybody holded the prices till the last hour, here you would have exited. If anybody looked into this 1 minute zone and look into this rejection, probably you might have exited. Next time when prices entered, you might have definitely exited here. How much profit, intraday profit, at what time? At 14:17. You got an entry at 14:10 and 14:36, sorry. Around 14:37, it reached the target. So within half an hour, the trade would have been completed. How much profit you might be getting? What is the RR you might be getting? Let us check the short position. Adding some stop buffer here approximately, and entry is within the zone. Within the fine-tuned 75 minutes I am adjusting. And your target is here. We are getting 1:3.65 RR we are getting. 1:35 RR. So this is the dynamic entry. This is the trade based on the dynamic entry zone, the concept you already learned. Sometimes zone will be created during the live market. That is what happened. This 15-minute zone was created inside this 75 minutes area. And after that prices retraced into the fine-tuned area, and from there it come down. Now you can calculate how much profit you would have got from here and RR. You please do this exercise. So this is about Apollo tires. The next one is Bandhan Bank. Excuse me. Bandhan Bank is also a daily high liquidity supply zone. Excuse me. So we have a drop, 1, 2, 3, 4 base candles, again a drop candle. And this zone is fine-tuned with 75 minutes time frame. Here you have a rally candle, 1, 2, 3 base candle. Actually this base candle structure is not good. See here, this is another rally, 3 base candles and a drop candle. But actually the structure, leg out structure is very, the risk is very, very high. But anyway, we get clarity once we move on to the lower time frames. Now let's go to the 15 minutes time frame. 15 minutes time frame, I didn't draw the zone because 15 minutes structure is not at all good. See here you have, maybe you can consider, this is also a base candle. Still if you consider this is a leg candle, 1, 2, 3, 4, 5, 6, 7 and then drop candle. Actually this is the leg in, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Even if you compromise and draw, how I compromise? I can compromise. This is the leg candle, these 3 are base candles and drop candle. That way I can draw the zone. That is possible. Sometimes you can draw a zone to check whether there is any institutional order flow is there in the 5 minutes time frame. That way you can draw the zone. This is the 15-minute zone. Inside there could be 5-minute zone. If you go to 5 minutes, it is even worst, much worst, the price structure. Even in 5 minutes you will reject. It is not a good zone. See the 5-minute structure. You have a drop candle, you have another drop candle. There is no base candle. What will happen to this zone? The zone will be violated easily. Even if you draw this zone in 15 minutes compromised, 5-minute structure clearly rejected this zone. That means this zone will be violated. So what happened today? Today prices didn't enter into this zone at all, but definitely in the coming days the zone will be easily violated because there is no institutional order flow. So that's why Bandhan Bank we didn't plan any trade. Next one is MGL. MGL is a 75 minutes. MGL What happened? Yeah. This is also a daily zone, rally, base, drop. This is the daily zone. This daily zone is fine-tuned with 75 minutes time frame. So we have a ERC candle as a rally candle. That means a drop candle. Drop 1, 2, 3, 4 candles, and again a drop candle. The 75 minutes. Sometimes if you hide this 75 minute zone, see it looks like a drop, base, rally, but these are all the medium size candles. So that is the reason why medium size candles can be part of the base if there is any earlier base candle. So that's why I am not very serious about this 75 minute structure, because we need to fine tune more inside. If we have proper fine tuned zones, maybe we can identify institutional order flows. So that's why 15 minutes time frame we need to fine tune. In the 15 minutes time frame, we have a rally, base candle, and a drop candle. Rally, base, drop. So 15 minute structure is there. That again fine tuned with 5 minutes time frame. Look into this 5 minute zone. You have a drop, base, drop. Drop, base, drop. See, if you, this is the problem with the trading view. The moment this gap, there is a huge gap down. Because of this gap down, the trading view candle structure is completely disturbed. That's why sometimes you need to hide some of the candles to see the proper structure of the zones. See, now the moment I hide what will happen? You just check the chart. I am hiding the gap. Now you got clarity about this price structure. We have a drop, base, drop candle. And with pro gap is also there. If you add the hidden body, you will get some more candle body. This is good enough to consider drop, base, drop. Here you have the institutional order flow 5 minutes time frame. There you can plan your trade. But today prices did not enter into the zone. Price did not enter, so we didn't get a trade opportunity. So MGL no trade, and NMDC. In NMDC, this is a 75 minute zone. Sorry, this is also a daily zone. You have a rally, 2 base candles, and a drop candle. Rally, base, drop. In this rally, base, drop, we fine tuned with 75 minutes time frame, because we didn't have any 75 minutes high liquidity supply zones identified. We don't have any 75 minutes high liquidity supply zones. All supply zones are daily supply zones only. So within the daily zone, we have a 75 minute zone. Rally, 1, 2, 3, 4 base candles, and then drop candle. This is the 75 minute zone. Inside this 75 minute zone, again fine tuned with 15 minutes time frame. See, we have a rally, 2 base candles, and a drop candle. Sometimes what happens? These large candles, extremely large candles, again, they make the earlier candles very small. Let me hide both these very highly explosive candles. This is the problem with the charts. Now you see the structure. We have a rally, 2 base candles, and a drop candle. Actually, it's not like that. Okay, fine. Rally, 2 base candles and a drop candle. Within this zone, again fine tune with 5 minutes time frame. Let us check. We have a rally, 2 base candles and a drop candle. Rally, base, drop, but this leg out is not great. That is okay. Because there is a very good move down is there from here. See, after that prices came and picked up the orders from this zone. So this zone is already tested. Next time, second time, prices moved very close to this zone, but they didn't go inside. Probably again institutions might have added a new order flow. Those who want to take risk maybe can plan a trade here, but you should agree it is a tested zone. But one point you have to, if you fine tune this zone with type 2 proximal entry up to here, this zone is not tested. See here. So that way, because many times what we do, we fine tune to type 2 proximal and we will check, especially high liquidity zones, the order flow is tested or not, the type 2 proximal. That way also you can take a trade here in this zone. I am just trying to tell you different price action clues, how this zone is getting supported. So that means still there is a strong order flow. That's why prices didn't enter. So definitely there is nothing wrong in planning a trade because the risk is minimized. Because risk is very, very minimal, there is nothing wrong in trying next time when prices are entering, because price action clues are helping us. This zone is fresh at type 2 proximal level. And the second time also again there were rejections before the zone. So all these are all indicating still there is a strong institutional order flow in that zone. Anyway, NMDC prices did not enter into the zone today. We didn't get the trade. And next one is a Pidilite industry. This is 75 minutes demand zone. We don't have 75 minutes supply zones. This is a 75 minutes demand zone. Let me move on to the 75 minutes time frame. This one previously also we got a trade, but again one more zone was there above, high liquidity zone, another high liquidity zone. It's like a rally base, 3 base candles, 1, 2, 3, 4 base candles and a rally candle. This we fine tuned with 15 minutes time frame. Here in the 15 minutes we have a drop, base, rally and then a follow through candle. We have a good structure. And this we fine tuned with 5 minutes time frame. See the 5 minutes. You have a rally, base candle 1, 2, 3, 4, 5. 5 base candles and a rally candle. And see the risk. The risk is also high. The risk of the 5 minutes is higher than the 15 minutes risk. For that what I did, I went to 1 minute time frame. So you will see very interesting 1 minute zone. See, you have a drop, 2 base candles and a rally candle, drop base. Probably this is the institutional order flow, a strong institutional order flow. And what happened recently? Prices went into this zone when? Yesterday only. Yesterday, that is the 20th June, Thursday yesterday, prices went into this zone, picked up the orders and see the move after that, very big move. Morning 9:21, prices entered into the zone, it gave you the trade and then throughout the day you see it gave a very big return yesterday. Up to here it has given the return yesterday. Definitely one of the 15 minute zone it would have reached the target from here. See, yesterday 15 minutes time frame, it picked up the orders and it moved up. Somewhere here you have a rally base drop is there. It reached this target and even violated, moved further up. Maybe if you are using 1 minute trailing stop loss, maybe somewhere here you would have exited, because here prices are falling. Maybe one of the 1 minute zone might have been violated. But anyway, this is yesterday what happened. Because this zone is tested, we can't plan a trade, because it is no more a fresh zone. Prices also went almost deep inside, close to the distal line of this 5 minute zone. This is only a 1 minute fine-tuned area. So it's not safe to plan our trade. But anyway, today prices just once again touched and moved up. Why this price action? If anybody asks, there is a reason. If you go to 5 minutes time frame, you will understand why there is a move up from here. Actually, there is a valid trade, but it is not a fine-tuned. You have an aggressive trade here. You have an aggressive trade. Let me go to the 5 minutes time frame, you will get clarity. See here, we have a rally, base rally. Let me draw the zone. In this rally, base rally, there is a price action clue. Prices came very close to the zone, and after that, see how it moved up. Maybe there is a strong institutional order flow in this area. This is only a price action clue. Prices just came near to the zone and then moved up. So there is a strong institutional order flow, might have been here. But you can't take the trade. What you can do, you just up to proximal, type 3 proximal. Type 3 proximal, if you adjust, almost it is near to the edge of this zone. If prices come here, you can plan a trade that way. See here what happened today. At 1350 candle, prices entered into the zone, and see the move. There could be a 15-minute zone. We have a legging base drop. Let's draw the zone. So this is an excellent aggressive trade. It entered into this zone and then it moved up. The reason is this is the price action. Before the zone, the prices came down and it stopped here. After that, it didn't move. So in the next candle, prices again moved up with a huge rejection from here. Gap up. The reason is there could be a strong order flow in this zone. So those who planned aggressive trade, you got a very good profit. Maybe some of you may say, here we have one more 15 minutes. Yes, here also you can exit. Actually, this is your first target. This is the second target. This is the 15 minutes zone. Here also you can exit. Still it is a good profit for you. Those who want to achieve more profit, probably you can use some 5 minutes trailing stop or 1 minute trailing stop. Based on that, you would have got some profit. 5 minutes is not very convenient here, because 5 minute zone is here. This is very near to this zone. If you would have looked for 5 minute zone, risk is very high. Maybe 1 minute you would have gone for a 1 minute trailing stop loss. Let us check any 1 minute zone is violated. See here you have a rally, base rally is there. Let us check whether it holded the prices or violated. Let me change the color. Okay. So this is the 1 minute zone. And slightly it is pierced. Definitely it will be within the stop buffer. It holded the prices. This is the only area. The 1 minute zone is pierced, but might be, it will be within the stop buffer. And after that prices further went and reached this second 15 minutes target. If anybody would have exited here, probably your profit would have been only limited to this much. But otherwise, you would have captured your profit up to this zone. So let me go to the 15 minutes time frame. That way you would have captured this entire move here. But whatever it is, you have two options. One option is either you took a trade and exited here, still you might have got a very good profit. How much you would have and let us look into that. I mean RR, how much RR you might have captured. Maybe some stop buffer we will add here approximately, and this will be your entry. Suppose if you would have exited here, you would have got 1:3.54 RR you would have captured. The first 15 minutes target. If it is the second 15 minutes target, you would have captured a 1:6.48 RR you would have captured. At least approximately 1:6.5 RR you would have captured. But either case is valid. Those who are using 1 minute stop buffer, you would have captured more profit for that 1 minute if you would have added some stop buffer. So this is about Pidilite. Both has given you, see, you have two stocks gave you opportunities today. One is based on the dynamic entry buffer that you already learned in lesson 21. And dynamic aggressive trade is another concept that is also you learned in lesson 21. Both we discussed in lesson 21. This is a trade based on the aggressive trade setup. Earlier one is not an aggressive trade setup, that is a perfect but dynamic zone creations. During the live market, your 15-minute zone is created inside 75. So that 15 minutes is valid for trading, but only in the next retracement. Next retracement also happened during the intraday. We got a trade opportunity, and after that it gave you over 1:3.4 RR it has given you. That way we got two successful trades today. So you please calculate what is the profit, what is the ROI. Anyway, I'll mention them in the Excel sheet, but you please do the calculation part. And the last one is Titan. This is also a 75 minutes demand zone. And this demand zone is violated today. See here, we have a rally candle with the body at the hidden body, rally, base rally. This is the 75 minutes demand zone. This 75 minutes demand zone is violated. Why it is violated? We already identified this zone is going to be violated. We already identified. How we identified? You already learned in lesson 16 how we can identify a zone can be violated. We learned different rules. You learned which rule is applicable today for the violation. After fine tuning the zone, you will understand. This 75 minute zone we fine tuned with 15 minutes time frame. See here you have a rally, base, rally is there. This is a 15 minute zone, rally, base, rally. This 15 minute zone again you need to fine tune with 5 minutes time frame. Look into this 5 minute zone. We have a rally, we have 3 base candles and again a rally candle. So this is the 15 minutes area. So we have an excellent fine-tuned zone is there. Then how can we say this zone will be violated? See the price action after this. Look here what happened yesterday. Yesterday at 11:30 candle, prices entered into this zone, picked up the orders, and see the move after that. It gave a very big move. At 13:25, it reached up to here. Probably it reached this drop base drop. This target would have been reached. Here you might be having some 15-minute zone. And finally, this was the price action yesterday before market closes. And our software identified this stock is near to this demand zone. But we know that this is already a tested zone, and the order flow also went deep inside. There is no chance of getting second trade also in this zone. Already tested zones, we don't plan the trades. Moreover, the order flow went more deep inside. And we know that definitely this zone will be violated. See today what happened in the morning candle itself. The prices came morning 9:15 minutes candle. Prices came down. Let me show you in 1 minute, you will get clarity. The first 1 minute candle itself. Prices opened here and closed it down, and all the entire zone is violated. Entire zone is violated, and once again it moved up. There could be other reasons why it is moved. And after that again prices were coming down. And finally this zone, and once again the zone is violated. Again moved up and further went down. Lot of action took place today in the 1 minute. Finally price closed below the zone. That means the zone is completely violated. We know the zone will be violated. That's why we didn't plan any trade. So this is what happened to our high liquidity zones generated in our yesterday's report. But we got two intraday trades today within the high liquidity zones as per the concept dynamic zone creation. Second concept, aggressive trades. Hope this information is useful to you. Let us all meet again in our next video. Thank you.